Yes, more people, welcome back to the channel. Ebro Trades here. Today I'll be going over a bread and butter gold strategy that I've been trading with recently. You can use this to consistently make between 3K, 5K a month. I'm not out here selling you guys a dream, telling you could become a millionaire or a billionaire, but if you want to make a sustainable, um, a sustainable income that can, allow you to live comfortably, this type of setup will really help you out. I know certain people are actually charging hundreds and thousands of dollars for this exact strategy or like a strategy that's very similar to this inside their paid courses, and I'm dropping it for free. So just like, comment, subscribe. My community as well is coming soon, so keep an eye in the description. And yeah, appreciate you boys. So we'll first start off by marking out the window in which we will be taking our trade, and that is 8 p.m. to 10 p.m. New York time, which is UTC -4 on the trading view charts. We'll then mark out the 15-minute high and 15-minute low. So this is the 15-minute low within the vicinity of just before our trading window starts. So 8 p.m. New York time, just before it, mark out the 15-minute high and the 15-minute low. And I've got the trading plan here on the right, in my usual fashion. So, I don't know anyone else who gives the trading plan out, like I've literally laid everything out for you. All you need to do is take this, go and back test it, and go make your 3 to 5K a month. Anyhow, so we said New York time, 8 p.m. to 10 p.m. is our trading window. We mark out the 15-minute high and the 15-minute low just before the window. We are then waiting for the high or the low to get swept. We are waiting for the high or the low to get swept. And that would look something like this. So let's say price action does something like this. Sweeps the low. Okay, now what? What are we doing now? We are now switching to the 1 minute time frame. As soon as the high or the low gets swept, we are switching to the 1 minute time frame. And we are now looking for our entry. Our entry is one of two. We are either looking for a break of structure and a market structure shift, targeting the opposite liquidity. So the opposite liquidity. So if we swept the low, we're looking for a break of structure to the upside with a market structure shift, aiming for the high. And if it's the high, then we're aiming for the low. Or alternatively, we'll be looking for a break of structure, a market structure shift with a retracement into a fair value gap or order block. And I'll show you what that looks like now. So price can either do something like this. So we form a high here, which means we've got a market structure shift to the upside, and we would enter here on the break of structure. So we would enter somewhere here. Why this is set up so big. So we'd put our stop loss somewhere over here, and we would be targeting 1 to 2, or say like, honestly, I target 1.5 RR for my first TP, and then I trail my stop loss, but I think 1 to 2 is also reasonable. So you'd close 80% of your position at 1 to 2 with a trailing stop, and then let 20% run. Or the setup can look something like this. Price comes here, it creates a fair value gap. So it would create a fair value gap or an order block over here, and then we wait for retracement into that fair value gap before taking our trade. So we actually enter off the fair value gap. So it could also look something like this. So we take our trade off the fair value gap retracement, which is, I mean, it's the standard ICT entry model, right? And then again, target 1 to 2, 1.5, depends on your risk appetite, and your position sizes. And then essentially price would do something like this. It would come back here, retrace into the fair value gap before going back to take out the high, right? Why this arrow doesn't want to. Okay, so before price goes on to take out the high. So comes back into the fair value gap, and then, does something like this. So that's essentially what the model is. Pretty simple. Waiting for the high or low to get taken, then waiting for a break of structure, market structure shift. We either enter directly off the MSS, or we wait for retracement into the fair value gap or order block. Pretty simple. Now let's go into the examples. I suggest you stick around to the end of the video because this example over here is a really important example. Okay, because I know a lot of casuals, They watch the first example, they think they got everything, they move on. True fans of the channel, people who've been watching my videos for time, know that I drop real source near the ends of the video. So this example here, want to see it. Right, let's go into example one. So let's head over to the charts. So we are looking for the 25th of June trade. So 25th of June, right. Here is our setup over here. So let me get rid of all of this first. And I'm going to try to record this entire video in one take, less than 10 minutes. So 25th of June, first things first, let us use the bar replay. So let's come back to here. Let's take it back even further actually. So 25th of June, we start at 8 p.m. Perfect. So we are taking our trade within this region. 8 p.m. all the way through to 10 p.m. And if a trade doesn't present itself within this window, we don't take a trade today. Simple. So first thing we're doing on the 15-minute time frame is we are marking out the high and the low. So we've got our high over here, and we've got our low down here on the 15-minute time frame. We are then waiting for either the high or the low to get swept on the 15-minute. So let's see what price does. Let's see what price does. Okay, so we can see immediately our high gets swept. Our high has just gotten swept. What are we looking for now? What are we looking for, guys? You can see here, we're switching to the 1-minute time frame and looking for a break of structure to the downside. So we are now, let's see what happens. Okay, price really drives up and takes out our high. We now switch to the 1-minute. Let's actually go back a candle and run this because the price actually took out the high on the previous candle. So high gets swept. We switch to the 1-minute time frame. I think I took this trade. Okay, we switch to the 1-minute time frame. All right, we're now in the 1-minute time frame. We are now waiting for a break of structure to the downside. We can see here that price touched but did not sweep the lows, so this doesn't count. Over here, this doesn't count. All right, let's see what happens. We are now looking for a break of structure to the downside. Massive wick here. This was probably a news release. Still looking for our break of structure. Okay, we got a bearish candle. Okay, we have now, let's see. Okay, perfect. We now have our break of structure to the downside. We formed, so we've got, just to make this clear, we've got a high, we've got a higher high, but now we've got a lower high, which means price has broken structure to the downside. We can now enter immediately with a short position. All right, I'd be going short pretty much straight away. Let me turn on my FVG indicator. We see a massive bullish FVG here that is irrelevant. Put my stop loss. You know, we take spreads into account. I'll be aiming for the opposite liquidity level, and let's see what happens. All right, we're in drawdown for a little bit, and then bam, price sweeps out our low. And I think if you actually closed half your position here and let it run, I'm pretty sure this trade really tanked. Yeah, you really could have gone all the way down to, 1 to 3 over here. But I think it makes sense, right? All right, let's go on to the next example. That was a pretty easy example. Now the next example is a little more complicated. All right, example 2. This one's a little more complicated, so I want you guys to concentrate. We've marked out our window, which is 8 p.m. to 10 p.m. New York time. We've marked out our low, and our high, so our buy side and our sell side on the 15-minute time frame. Right. So we've done these steps over here, UTC -4, 8 to 10 p.m., mark out 50-minute high. We now wait for our high or low to get swept. Now watch what happens. So nothing is swept yet. We see that we initially were aiming for the sell side, but what does price do? It actually goes sort of an impulsive move upwards towards the buy side. So we're now aiming for the buy side liquidity. We're waiting for the buy side liquidity to get swept. But then, bam, we make a new low. We make a new low. What does that mean? That means that our sell side liquidity is actually no longer this. This is invalid. And our sell side liquidity is actually this now. So this is our new sell side liquidity. And this is, you hear a lot of people talking about key levels. This is our new key level. This we delete. This is our new sell side. Now, once we form a new key level within the 8 to 10 p.m. time frame, we immediately switch to the 1 minute because I'm now expecting for our new key level to get swept. Right? So this is our key level over here. So this is our new low. Now, I'm waiting for this new low to get swept so that I can aim for a high. I hope that makes sense. Watch it again if it doesn't. So, what am I waiting? Bam. Immediately, my new key level gets swept. I am now waiting for a break of structure to the upside. So, I am waiting for price. So, price has done this, is made a low. It's swept the low. I'm now waiting for price to break structure to the upside. And that would mean that I can enter. So, what does price do? Okay, I'm waiting for a higher high or a higher low. And immediately, there we go. I get my massive higher high, right? It's just above this. Let's wait for confirmation. There we go. There's our higher high. Just to confirm it, there we go. So as soon as we punch above this high over here, we've now broken structure to the upside, and now we can aim for our buy side liquidity. So I go long position. I don't need to wait for any retracements, though I do have this massive fair value gap over here. I'm targeting 1 RR for my first TP. And let's see what happens. Let's see how this trade plays out. And as you can see, I've been pretty conservative because I know that there is a big fair value gap over here that price could potentially retrace into. So we could also wait for retracement into this fair value gap. But, with experience in the markets, you know when to take entry 1 versus entry 2. So you can see here, I've put down both entries. Let's see what price does. All right, we come into, so we actually tap into our fair value gap before smashing our TP eventually. So before smashing our TP. And I think price does actually go up afterwards. So if you set a trailing stop loss, you could have gone for a higher risk reward. Um, that's it for this video. I think this second example is a little more complicated. I like to call this adaptive key levels. So key levels that change over time. How do you deal with them? I've explained that in this example. You do need to go and back test it though. That's the thing with a lot of these trading strategies, with a lot of these setups. They all work. They all work, but none of them are mechanical. I don't believe in this whole mechanical system where you have a set of criteria and then you can take wins every time over a set of mechanical rules. That's not how the markets work. A lot of it is adaptive, you know? Be a reactive trader to the markets. Don't be a predictive trader. Don't predict that certain things will happen if certain things happen. React to the market as it happens. Please like, subscribe, comment, leave any questions below. Watch out for my trading community. I'm also making an Instagram account for the channel, so I think that will be linked somewhere below. Give us a follow there, and I'll be replying to DMs. Hope you've enjoyed the video. Peace.